Good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday, 7 a.m. Eastern Time, 12 p.m. GMT, every day of the week, where we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make no small amount of money on the internet, ideally. I'm your host, B-Check. I'm joined by my legendary co-host, Legendary. We are live on X. We are live on YouTube. We're going to bring all the best news from the NFT market from the last 24 hours to you in just a little bit. But before we do that, just a reminder, friends, that nothing that we say here is financial advice. This modern market is extremely risky. We do not know anything for sure. Please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, how are you doing this Tuesday, the 9th of January?
GM, I'm doing quite well. Based on our conversation yesterday, I'm still practicing the art of worrying less, managing not bad. It's day 2 of working on that monumental task. Still enjoying the sunny weather in Doha. Got until Thursday. Thursday in the morning, I'll be on a plane back to Austria. In Austria, it's really cold. It's surprisingly cold in Austria. Like when I left, we had 4 to 5 degrees, and now we have like -8, -9.
Interesting.
So it's good to not be there at the moment.
It's going to be a big contrast when you described what did you say, the subtle art of worrying less. Sounds like a book title, but it
Yeah,
sounds
like
like
the
a
subtle
very
art not giving a fuck.
well.
That's like the very famous book, right?
That's what I was going to say. It sounds like you've taken that and interpreted it in a very kind and charitable and kind of kind of contemplative way. You've taken that and you've just repackaged it into the PG audience that we have.
Yeah, to the PG-12 more diplomatic, boiled down version of it.
Yeah, I like it. That would be a nice tweet. So what I mean, I saw one tweet from you yesterday. One of the things in order to, which is part of the subtle art of worrying less, seems to be floating on some water on a very high roof. Is that one of the things that is essential to worry less?
That definitely is helpful. Yeah, that lovely pool on the 46th floor is definitely helping with that mission.
We
I'm
were
not
talking
gonna
about this
lie about
yesterday.
that.
Like, why is it that when you're high up, you just feel good? And then we took our call. We always do a post-show call, and you were down on the ground floor. And I could see you weren't feeling so good about yourself on the ground floor. When you're up on the 44th floor, you're feeling good, feeling feeling powerful. When you're down on the ground floor, I could sense you'd lost a little bit of your a little bit of bit of your spirit. What do you say to that?
Interesting. I don't know. There might. I mean, we're joking about that, obviously, but I think there might be something to it. Like when you, it is something fascinating with being high up, whether it's a building, whether it's being on a plane. It's something that I don't know, has a bit of magic to it, at least in my opinion.
Absolutely. A lot of magic to being high up. Something else that is getting higher at the moment
Mm,
is the
good segue.
charts. The charts are going up. Bitcoin's obviously up 5%. We're going to get into a little bit of a discussion on that and everything else in the market as we bring you the roundup for what is going on. As always, everything that we bring to you is from the snapshot, which is pinned up top. It goes out every single day. Please do give it a like if you find that it brings you some value. So let's get into it, starting with the price action. I'm just going to share my screen at the same time for the people on YouTube. Let's do it. Starting with the price action, Bitcoin was up as much as 6% when I wrote this at 46.7K. Very nice action there. ETH was up 3% at 2.3. Solana up 11%, back at $100, and Ape was up a couple of percent at 1.4. NFT volume on ETH was 9.7 million. Solana was 5. Bitcoin was at 16. In terms of the headlines, number one, Gary Gensler writes thread to those considering investing in crypto assets. I want to go through that part in seriousness and part as a joke because we do like to dunk on Gary, but also want to think about why he might be writing that type of thread at the moment. Number 2, Bitcoin puppets surged to 0.029 Bitcoin floor with $1.9 million of volume in the past 24 hours, which is $0.2 million more volume than node monkeys. That's kind of interesting. You can see the image of them in the snapshot up top. And Taproot cats were revealed as the second collection by Taproot Wizards. Can't see any images of them at the moment, but this seems to be a second collection, even though the first collection doesn't exist yet, by Taproot Wizards. So that is really interesting to see. So much hype around that collection. English, I could see you reacting in the audience. Our resident ordinals expert, if you want to jump up at any point to talk about that, happy to, or if you want to put some extra context in the comments, happy to take that too. Getting into the floor prices, we have CryptoPunks at flat of 56.9 ETH, got Bored Apes slipping down beneath 25 ETH at 24.6, down 3%, Mutant Apes at 4.9, DGods at 3, down 4%, Captains at 4.1, Azuki's at 7.1, Penguins at 10.9, Moonbirds at 1.3, and Nouns at 8.7. A couple of notable sales. Grant Yarn Overpass on the secondary sale selling for 30 ETH, that's $69,000. And X Copy No Favor selling for 17 ETH, that's $39,000. Legendary. That is the price action. Those are some of the headlines. Any numbers standing out to you there?
I do like the X Copy sale. I also do like that Ape is up a tiny bit. I'm still not sure what I want to do with my Ape bags, if I want to keep them and just wait for better times, or if I'm finally deciding to sell them off and not look at the opportunity cost of not being able to deploy that capital otherwise in the meantime. Still a decision that I need to figure out. Do you still have Ape, or have
I cut my losses, man. I cut my losses. I bought it. It went straight down for like 4 weeks. I basically sold the bottom. And then I just sold because I was like, I don't know what I've just done. Why have I done this? I'm out. But so yeah, definitely not recommended practice from my perspective. Although I'm really glad that you brought up this kind of question of Ape, because I don't know to what extent it applies to that, but I had a very important conversation with someone yesterday. A smart investor in various coins, and we were talking about vesting schedules. And the key thing that we were talking about is we were both in this one particular coin, and we were just like, why is it not going up? Like, it should be going up. Like, everything about it should suggest that it should be going up, especially in a market which is kind of hot right now, right? Like, everything seems to be moving up. Why is this coin not going up? And I had my suspicions that the investing schedule had hit, and investors had started to unlock, and therefore, like, there's just that huge selling pressure. And although this person didn't say like 100%, that's kind of what he confirmed. And it just made me reflect. And I think this is something useful for everyone who's operating in this industry, that when coins come to market, obviously there are people who invest in them beforehand, and they get a little bit at that token generation event, which is great because they see a return on their investment. They might not get all of their initial investment back in that one go. They'll probably get a percentage of their allocation of tokens. And then at some point in time, those investors will start to see more of their tokens come back to them. Sometimes it's after a 3-month cliff, which means they have to wait for 3 months before they start vesting. Sometimes it's after 12 months. And then depending on the deal, it could take I've seen anything from 12 months vestings, which means to receive your allocation of tokens, it could take you 12 months. I've seen 24 months. I've seen 36 months. I've seen a 6-month cliff. I've seen no cliff. I've seen a 12-month cliff. There's all kinds of things. And just to be clear for the people who are slightly new to it, a cliff is the amount of time that you have to wait in order to start to see your vesting tokens that are going to start coming. And then the vesting period is how long it takes for you to receive all of your token allocation. So I think it's worth thinking about that now. Legendary, I've got some more thoughts, but I just want to throw to you because I know you're even more sophisticated on this stuff than me. So what's your kind of thoughts on that? And the reason why I brought it up was because I was thinking of Ape. That like, is that happening in Ape? I don't know 100%. This stuff is just not disclosed by companies to the broader market. Well, I'm sure you can find out, but you've got to do a bit of investigation. So yeah, any thoughts on that?
I mean, what we're definitely seeing on the broader market, especially in this run-up, is that the terms for many investments seem to be so much more on the, let's call it, greedier side, on the side that favors early investors and favors VCs and KOLs and whoever manages to get in early as an angel than we've seen in the last cycle. Especially when it comes to like the initial unlocks at TGE and very low cliff periods of just a couple months. And there was one post that went viral, I think it was a couple days ago, that Zach XPT also commented on a specific angel round that basically had the message that this is, you know, why everyone else can dump on you because the cliff is so low, etc. I think it was something with a 2 or 3 month cliff, doesn't even matter. But Loopify also commented on that, and Loopify was like, "Lol, he's never seen that before, a cliff that low." And I can say from, you know, some of the projects that the both of us have taken interest or have taken a look at least at, that now it is more frequent to see sales happening with 1 to 3 month cliff periods, and that basically allow you to be fully vested within a year, within 12 months, which you can be quite absurd to a certain extent. I mean, it might make sense for a small round, but it certainly doesn't make sense if that were to be a round where VCs, angels get in any significant amount, because then the pressure to sell it on the market would be very high. So I think having that very greedy sentiment in the market on the one hand, and on the other hand having like let's call it like quote unquote traditional tokenomics that Ape has, that are certainly still, you know, very comparable to tech VC, is certainly still very fast when it comes to unlocks, etc. But definitely not on that very greedy side of things that we're seeing right now. Might put additional pressure on the token as well, just from that opportunity cost perspective.
Really insightful stuff. I want to double click on something there. You said that it could be the case, or this is my interpretation of what you said, it could be the case that, like, if you see terms which are a very small cliff with very quick vesting, there could be a circumstance where that's not so bad, so long as the amount is very small. Do you want to just elaborate on that and explain how that works?
Yeah, sure. I mean, if you raise a round and you basically allow big tickets to get in at terms that where they can dump the token, I don't know, 20% at TGE and then vest over 6 or 8 months and dump the rest of that, that obviously puts massive sell pressure. Now, if you raise a round of, say, 20 mil and you reserve a 500K allocation of that round for, I don't know, typically in this space, let's be real, it is for influencers, it is for KOLs, in, you know, exchange for wanting them to report positively in a project, you offer them very favorable terms instead of paying them off for threads, etc. But it's just a smaller part of the overall round. It won't affect the token price much, especially if you work together with a market maker and you make sure that once the token is listed, you have enough depth when it comes to liquidity that those people who are the fastest to unlock cannot like significantly move down the token. And that is a different situation. Whereas if basically your entire round that you're raising would have those very greedy tokenomics and unlock mechanisms.
Very good explanation. I thought that was helpful to tease out for the people who might be newer to it, but even for the people who are here and who know that this stuff goes on. We're obviously kind of experiencing it for the first time when we started to see a bunch of this deal flow and tried to assess. Well, we're in a good position to be able to compare the different types of things we see, right? And as you say, some of them are more alluring to the investor because it feels like you're going to get your money back a lot quicker than other people. So much so that I think some of the rounds have even, it almost feels like you're better to be in later than the seed, depending, like, because you get your money back so quicker, because there's a there's typically a discount for being the earliest. So if you're the seed investor, you'll have the earliest price possible and the lowest price. And if you're a little bit later, you might vest a bit quicker. You might see some tokens back quicker, but you pay a higher price, a token price. So very, very interesting there to debate and discuss, because that's definitely happening. Well, I think so. I thought that was definitely happening to one of the tokens I'd bought, and I kicked myself a little bit because I thought I should have really tried to figure that out beforehand. And it kind of made me think the key learning was, if you don't know what the vesting schedule is for that token that you think is the next hot thing, and it's been out about 6 months, or it's been out about a year, or it's been out like about 18 months, like there's a very, very good chance that there are huge unlocks about to come where those initial investors are about to start selling. And they're right to sell in a sense, right? They're, those were their terms. They invested at an earlier price. Their liquidity's been locked up. And so that's their moment to capitalize on their investment. Just want to link it, Legendary. I want to hear any thoughts you have on that first, and then but link it to Ape, for example, and anything else that you see in the market. Do you think that could be what's happening with Ape? Like, is that why you're seeing some confusing action there, where the rest of the market is moving, but that is sitting still? What are your thoughts?
I think that bit that you said about knowing the vesting schedule is absolutely important. We spoke a great deal about the information totem pole on this show, and that you have to know where you are on that totem pole of information, and to the very same extent you want to know where you are on the totem pole of vesting. I think there was also a very good thread by, maybe I'll find it, I don't remember the name, I absolutely have no clue, that talked about the price action in the Bored Apes ecosystem, and the Bored Apes being a Veblen good, that is that kind of luxury good that works exactly in the reverse way around. That means if the price increases, the demand for it increases. And then you have the ape token tied to it that essentially can be staked and is constantly, just due to the staking, unlocking on the market, and is taking away kind of the value of the ape, but it's also like flooding the market with the token. So that's probably an additional component, that you can't look at ape in isolation. You also have to look at ape within the Bored Ape and the Yuga Labs ecosystem. So that's definitely one thing that's happening. And as for your question in terms of the staking unlocks, honestly, because my ape bag isn't the biggest anymore, I am absolutely not familiar with when the next unlock's going to be, or when the last unlock before that had happened.
Yeah. Fair enough. I think it's an important discussion to have anyway, just to put it on people's radar, and for people to reflect on that before just to have it on their radar, basically. I've got a final question on that, but I want to throw to Funky first, who I know does some of this type of stuff potentially as well. Funky, what are your thoughts?
Jam gang. Yeah, no, this is a great awareness conversation. I'm frantically trying to find the website. There's a really good website that's rather robust with regard to all of these token projects and their unlocks. So you can see the vesting schedules, and you'll know exact dates for when tokens get unlocked and stuff. I'm trying to find it in actually the Kingdom server, because I know we've used it before. So I'm going to get that, and I'll drop it in the comments. But I just wanted to make you aware that there is a pretty good, and there may be several of them like that, where you can track the token unlocks from any vesting schedule.
Okay. I mean, thank you. That's like, I would consider that some type of all-knowing, omniscient document. That like that would be like one of the best documents to potentially give you power in this market, because that knowledge is not widely shared, it's not widely distributed, and everything, my instinct would say that that is like one of the best things available to us. So that would be amazing, Funky, if you could find that, share in the comments so everyone can take a look and have that, save it, bookmark it, whatever you need to do, because I think that'd be really important. One final question, Legendary, for me before we get into the headlines properly is, like, do you think as the market matures, now that we're reflecting on this deeper, is this something that's going to have to be far more public? Because obviously initial investors get to see the schedule and they get to see the price that the seed investors have invested in, and then the next round and the next round, or however many rounds there are. Do you think this is something that's going to have to be given even to the public pre-sale buyers, and it's going to have to be like reported on CoinMarketCap and CoinGecko and all the places where someone would go to check the price to see if they want to buy in, Dex Screener, whatever site? Do you think it's going to have to be something that's, wherever you can check the price, you're going to have to be able to check the schedule at the same time, because you can't really read the price without knowing the schedule?
That's an excellent question. I mean, if you look at the world of, like, say, traditional venture capital, and I know it's a bit of a stretch to compare what is happening in this space with VCs, you don't necessarily have full transparency of what's going on in private equity, right? So if you get into a private equity deal, there will be definitely more due diligence going on than in this space, but it will take you time to figure out what has happened. And let's say if you participate in a purchase of equity on the secondary market of a tech company that had a couple rounds raised of PE money, you won't necessarily have all of that information from the get-go, so you will have to figure it out. The difference is that there's no token that's trading at the same time that is affected by that information. So while there is not necessarily always more transparency in, like, say, the real or the traditional VC world, you don't have the token implication on the one hand. On the other hand, what we've also seen in this space is that those terms for rounds can change very quickly, and we've seen it with rounds that changed so quickly. I've also seen rounds that got filled up immediately, and then just another round was opened at slightly different terms because they said this is the round at, I don't know, 60 million valuation, and then essentially what happened is after that round was filled, there was another round at 61 million valuation that had the same unlocks, and nobody in the 60 mil round was expecting to see a 61 mil round. So
that's true.
Even if you have the information, the question is how much you can rely on it, because things can change so quickly. On the one hand, I would say that we would move to like more transparent future. On the other hand, the counter argument would be looking at something like Blast. Where are we on Blast right now? 1 billion TVL, a bit more than 1 billion, something like that. You don't have any kind of tokenomics, right? Everyone's putting their money in, expecting a 30 to 40% APY based on the track record of Pac-Man, of a guy called Pac-Man. And there is not even information of a token. You do it for, redacted. And you hope that the tokenomics are going to be good because they have been paying investors before that. Yeah. So you couldn't even make the point that we as a space are demanding to have more transparency because we love to ape into shit that we have no clue about what the actual metrics of the investment are. So I don't know how it will balance out in the future. I think, however, the track record will always beat like publicly available information because we just love to ape into things, whether that's out of greed or out of FOMO. And this is what track record means, just more than pure tokenomics on a paper.
Yeah, I see what you mean. I wonder whether at a minimum though, so I guess there's two different things happening. On the one level, you've got that primary sale where I don't know to what extent you need to provide those to different groups of people. Obviously, the pre-investors wouldn't invest without it. I'm not sure why retail just do invest anyway, maybe because they feel like they have no choice. But then you've got the secondary aspect, which is, okay, someone is coming to your coin a year later, trying to evaluate it, and they're just looking at the price action. They're thinking, oh, this looks like good price action. It's been going up. It looks really positive. It's a great company. And there's no information anywhere on that secondary site that there's a huge unlock coming in like 2 weeks. So I think, I don't know, maybe you could split it into primary and secondary and try to figure out what would be the proper requirements to move the space forward in that respect. But I can see it, like, I do think that's problematic in general for people, which is a little bit concerning. Any final thoughts, Legendary, before we move on?
Yeah, one final point to add to that, though. If you look at the stock market, even on the stock market, you don't necessarily know what's going on, right? So take one of my favorite examples, which is the Airport Vienna, Flughafen Wien, being a stock that has extremely small free float. That means just a small amount of shares is publicly tradable, because I think it's an Australian pension fund, or like Australian institutional money that invested in loads of European airports, one among them being the Austrian one. And they could do, yes, they have to announce if they plan to share, if they plan to sell, a significant amount of their shares, they have to announce that. But you don't necessarily know what they want to do with the shares or what the long-term strategy is. Obviously, you would argue, pension fund is more conservative, et cetera, et cetera. They won't pump and dump airports in Europe, but at one point they might change the complete investment strategy. And I would say that you, as the retail customer, are not the first person to learn about that. So in a similar vein, when you get into a publicly traded stock, yes, you're not afraid of unlocks from VCs or KOLs, but there's still a lot of information that's just not straightforward and not necessarily available or known to you from the get-go.
Yeah, I think that's a very fair point, actually. I hadn't really made that comparison. And the other thing I was going to say is that it's very important to be careful what you wish for, in a sense, because people end up finding ways to bury or hide the information that you want, that they don't want you to see. So you can definitely foresee a scenario where people are mandated to provide the full vesting schedule, the full kind of allocations of different people and the dates and all of those things. But the thing is, once you mandate that, you can guarantee that someone is not going to just give that to you in a nice chart with like the dates highlighted for you. Like, no, it's going to become a huge document where they're going to provide you with all kinds of other information. It's going to get buried on page 17 of some 30-page prospectus or outlook for the token, with all kinds of other information. And then we're just back in square zero, where no one knows the stuff, because they're not going to read the stuff. And as you said, we have a clear proclivity to want to ape into stuff anyway, and being past a 30-page document is probably not going to get read by the majority of people. I still think that would be helpful, because I know myself, I would take a look, and I would still prefer for it to exist. But I wonder whether people in general would read it if it was buried, which is what people do with bad information. They're going to bury it. They're not just going to hand it to you on a silver plate. Legendary, reflections on that? Then Funky's got his hand raised. Want to throw to him?
Yeah, that's a very good point. On the one hand, on the other hand, if you look at least the extent of prospectus laws that I'm familiar with for the European Union, which obviously is the legislation that I'm the most familiar with, so can't talk to US. For prospectus documentation in the EU, you have to have a kind of one-pager that's at the start of it, and that has a requirement of information that needs to be shared on that for, say, ETFs or other financial products. And I would expect that there is similar regulation for other large jurisdictions as well. But again, I can't comment to that. Maybe NFT Stats knows more about that for the US market, but that's at least the way how it is in the European Union.
Interesting stuff. Funky, your hand was raised first. What are your thoughts?
No, just real quick, some housekeeping. Legendary, you broke my heart when I learned we couldn't pump and dump airports, because I live in Tampa and we have one of the best airports in the United States. So I'm a little disappointed, but I did find the website. It's token.unlocks.app. I put it above in the nest. B-Check, you didn't have the snapshot up there. So if anybody wants to just grab the site while it's visible, so you can check these token unlocks yourself. And then if you want to take that down and replace it with a snapshot.
Cool. Thank you very much, man. That's super helpful. I'm just trying to see what it is. So Funky, just to double check, this is the site where people can go to view all of the token unlocks and the vesting schedules for basically any token?
I don't know if it has all of them, but basically when you go to the main web page, because it shows the cliff unlocks in the next 7 days, and it shows linear unlocks on the right. You can search for a project. I think it will give you specific dates for when tranches are coming up and stuff like that. We use this a lot to kind of time buys, especially if tokens are public, for instance.
Okay.
But it's a great resource, something that anybody would find valuable.
Amazing.
That is
Thanks.
so good. I'm currently looking at the page. Thank you so much for sharing that, Funky. For example, you can see there's a cliff unlocks section for the next 7 days. We can see that on January 12th, Aptos will have unlocks. It also says from which segments, so foundation, community, core contributors, investors, those unlocks are going to be, the total percentage of unlocks, and the associated dollar value. We see linear unlocks per day for tokens like AVAX or Solana. We've seen what tokens like Bonk or Pepe that have been recently added. You can build your own custom watch list, apparently. We also see Ape in there. It's so good.
That's so helpful, man. Thank you so much for that. Shout out to Hamza as well in the comments, who had provided that same website just a little bit before. Funky, just a quick question. You said you work with a fund as well. How specifically do you use that document? Like, what's the way for the smart investor to use that extra information?
Well, I mean, we don't use this for the fun side of things, because obviously, like, we get stuff into deal flow. But why I find this tool particularly useful is, let's say you're positioning or DCAing into something like a project you feel has strong fundamentals. It's always worth looking at when there's going to be large unlocks, because sometimes those people are still so up, you'll see a lot of volatility in that particular token that day. So people might be dumping because, if they bought it at a pre-sale price of half a penny or something like that, even though the token may have collapsed in the bear, it still has more downside action because these people are still up sometimes 10, 20x. And so they'll be selling off in large tranches. So it's worth looking, ahead for projects that you like, to see when these unlocks are coming and be prepared to maybe take advantage of a bad dump on a particular day. That's how we use it a lot in the kingdom for the publicly released tokens. But for deal flow, I'm going to find another website that's really interesting that will track, I think, deal flow, but not all of it's there, because some of this, as Legendary alluded to, is very murky.
Got it. Makes a lot of sense. That is super interesting. Thanks so much for that, Funky. I'd recommend everyone just bookmarking that, or just taking that document, that website, and putting it somewhere where you're going to be able to get back to it easily, because it could explain a bunch of action sometimes in the market if you have a better understanding. Let's move on. I think that was a super interesting discussion and thought analysis there. Let's get into one of the headlines from today, Legendary. Where do you want to go to first?
Let's go to Gary Gensler. Maybe one quick thing before we go to Gary Gensler, because we will be talking about the ETFs. There's a little bit of a quite positive update when it comes to the ETF situation. Both BlackRock and VanEck have filed updated documents on this very Tuesday, because on the filings yesterday, they received comments by the SEC very quickly. And there's a couple of points that have been changed after we spoke about the detailing of the fees yesterday. And the comments concern ways to mitigate damage to shareholders in the event of insolvency, and also to avoid a conflict of interest between the ETF's authorized participants. And basically the key takeaway here kind of is that we are seeing a very smooth communication between the SEC and the ETF applicants, with comments being sent back and forth within less than 24 hours, which is a positive sign. And then we've also seen, and that kind of is the segue into the news that I would like to pick first, that thread by Gary Gensler. Let's maybe have a quick look at the thread before I'm gonna share my opinion on that. It is a very short thread consisting of 4 posts that starts with saying some things to keep in mind if you're considering investing in crypto assets, and then it highlights 3 points. The main takeaways are, well, A, it might not comply with applicable law, including federal securities law, if you invest in certain crypto asset services or investments. B, those investments can be exceptionally risky and are often very volatile. Many major platforms, crypto assets have become insolvent and or lost value. and see fraudsters continue to exploit the rising popularity of crypto assets to lure retail investors into scams, including bogus coin offerings, Ponzi pyramid schemes, and outright theft, where project promoter just disappears with the investors' money. I found it quite interesting, especially if we talked about like some of the things that have been changed in the updated filings by BlackRock and VanEck, touching on that risk of insolvency and how to mitigate shareholder damage. It's also something that Gary Gensler is pointing out in his thread on the one hand. On the other hand, and that kind of is a sentiment that is not only mine, that we've seen multiple times in the comments under this thread, it feels like a bit of capitulation from Gary Gensler in the sense of, the ETF is coming. I still think that crypto is a Ponzi. I still think that all of this is a scam. So here's, again, another word of warning of things to keep in mind before you invest into this asset class.
Interesting. Yeah, I saw a lot of people view it in that way, the way that you just described it, as if he's like confirming that the ETF is going to come through, as a consequence of saying like, look, if you are going to consider investing in it, this is what you might like to keep in mind, because it's basically going to be very, very easier to do from now on. I didn't read it like that as much. My actually more controversial, I don't know if it's controversial at all, but my kind of different take or big takeaway from it is that I actually agree with almost everything he said here. Like, I don't think he actually said anything that controversial. He said that those offering crypto asset investment services may not be complying with applicable law, and sometimes they're not, to be fair, including federal security laws. Investors in crypto asset security should understand they may be deprived of key info. That's literally what we've just been talking about, how loads of people buying coins don't have the key information on various occasions with respect to their investment. So like I definitely agree with that aspect, and we can debate to what extent the full picture needs to be provided. I don't know the perfect answer, but I mean, that's literally what we're talking about this morning, and we're kind of debating whether some of our coins are going down because people are dumping on us with these unlocks at the moment. So I actually agree with that. I don't think it's controversial to say that. I mean, we say this at the start of every show. Crypto assets can be exceptionally risky and are often volatile. We definitely know that to be true. Yes, major platforms and crypto assets have become insolvent and or lost value. That is also true. So I don't know. I kind of went through this. I know that we like to dunk on Gary a lot of the times, but I kind of went through it with the eye of a lawyer and just like, is this sentence true? And like kind of taking it step by step. And a lot of those sentences, if they're not completely true, because obviously there are examples where there are carve outs and there are shining examples who don't do some of the things suggested, but it's certainly not an untrue set of statements. But I think in the same way that someone like, I don't know, in the same way that someone like Trump manages to drive people completely crazy or elicit like really, really strong reactions, kind of irrespective of the underlying facts, Gary was just always going to get dunked on for this, for in some way. What do you think about that? What are your thoughts?
Yeah, I mean, I'm the first person who loves to dunk on Gary Gensler, but with that thread, there's nothing to dunk on. It's just perfectly accurate, and it's, as you said, everything that we try to warn in this show and to discuss in way greater detail than obviously he did in his thread. So from a content perspective, there is nothing to really dunk on. I do want to take a quick moment though to shout out John in the comments for providing a bit of extra context on some of the things that we spoke about, including another post by Eric Balkunas, the Bloomberg ETF analyst, that explained a bit more of that updated S1 filings that I just touched a couple of minutes before we got into the Gary Gensler thread.
Amazing. That's super, super useful. I agree with that. Wanted to kind of go to NFT stats. Haven't heard from him in a while. I know that I think been speaking about the SEC some time ago. when he was last on the show. And it's also just been a while since we've chatted. Bitcoin has obviously made some nice strides, and the ETF move has been seems to be quite positive at the moment. Would love to hear your thoughts, Sam, on how things are moving, and potentially welcome back to the States. Are you back from your trip?
Yeah, I'm back. Got up at 2 a.m, so proper jet lag.
Oh God.
Different vibe than in the past when I've been on the show. But yeah, no, I agree. Yeah, and I've been a little bit more removed from the market than normal, just because of travel and kids and stuff like that. I mean,
Sure.
I agree with what you're saying though. Like those points about Gary Gensler are they're not only true, but they should be like plastered on billboards. I read some stat that there's more theft in crypto than all bank robberies in the world times 5.
Wow.
The platforms, and just a month ago, two platforms that people were either using or being paid to use were hacked, between NFT Trader as well as Flooring Protocol. I mean, Flooring Protocol is out there advertising that he will pay us Christmas bonuses to use his platform. And then literally simply for having used the platform, if you're going to use that platform, you have to sign your assets. And for no other fault, hackers came in and stole everyone's NFTs. Like these are, one of my best friends bought a CryptoPunk. He was one of the senior general managers at Uber, really smart guy, Ivy League education, bought a CryptoPunk, big Bitcoin guy, and he got it stolen within a week. Like these are just like basic warnings that everyone should be getting in the space. But I think you're right. I think when there are certain people where when they say anything, everybody will disagree and dunk on them and laugh at them. And it's kind of discrediting, it's like you have to, I take it very, very seriously with my account, that I'm constantly trying to evaluate my priors and my biases and try to give people the benefit of the doubt. And I feel like as a community, we're pretty bad at that when it comes to certain people.
Absolutely. That's really illuminating. I think it's super, super important to just read the text, read the information, analyze the information, play the information, not the person. And I think that's one of the things we fall into the trap of quite a few times in this space. Thanks for that, Sam. Jack, your hand's raised. What do you think about this latest thread?
Yeah, again, like completely agree with everyone here that it's just facts. That's realistically what we're looking at right now. Is just, this is what you need to be aware of. I think the thing that it makes me think of is just how this is not the mass adoption event that some people think it is, in terms of like there's going to be every new entrant that comes into this space is going to have that same realization. I think we're seeing people right now just get absolutely nuked on shitcoin gambling. It's like these are people who've been in the space for years and they still just making the wrong bets, and it's not all up only, even if that's what's on your timeline. So I think, the idea that when these come in, when the ETFs come in, when new entrants come in, it's just going to be smooth sailing from there. I don't see that aspect of it. I think it's going to be it'll definitely increase the amount of devs that come in and the technology that's built through that. But I think, we're still in really like nascent stage. Like I think it's super, super, super early. And just because we've been in it for a couple of years, I wouldn't take it for granted that like this is the moment, because I think there's still going to be a lot of volatility to come.
Yeah, absolutely. Completely agree with that sentiment. And thinking about reflecting further on what Sam said about people losing their assets like really, really quickly, just like a kind of tangential point, but maybe one of the reasons that's happening is because, I don't know what you thought, Legendary, but like the ads on Twitter right now are basically all wallet trainers, and you can't see properly that they're ads. There's like this little writing in the top right hand corner that says it's an ad, and basically all of them are scams. So that's pretty shocking, to be honest. Do you have a quick thought on that, Legendary, before we hit the Web3 roundup?
Yeah, it's not only the ads, it's also the verified accounts. You have so many drainers with a golden check mark that represent to be layer 0, etc. Because no matter what price Elon Musk will tie to the proof of humanity by paying for a subscription, by paying for a corporate subscription, it just pays off because we move around that much money because
Mm.
assets are so expensive. And if Sam talks about a friend of his who lost his CryptoPunk, that I don't know at what time that happened, but that's it's a 6-figure loss. So if you pay, what is it, 1K for your corporate subscription for the golden check mark, and there's like no protection policy that kind of should take care of that. There's only like one layer 0 organization out there, or whatever other company gets impersonated. And even if they pay like 12K a year, it just takes one person for them to scam to make a quote unquote 8x on their investment. So scamming is so lucrative in this space that I don't think that the check marks, even if they like quadruple in price, will change that. And the same goes for the ad situation. It's absolutely terrible to see almost exclusively scam ads on X. The situation continues with hacked discords. Jack is completely right on that. It's still far, far away from mass adoption, and everyone can be a victim of something, where that's flowing protocol or whether it's on an individual level. Like, I've been in the space for 7 years, and I got my wallet drained for the first time after 7 years because I took a moment where I wasn't paying attention fully. So we are still early when it comes from a mass adoption capability.
Yeah, shout out to the elite artist on the YouTube comment saying we're even seeing ads of on YouTube of AI generated videos of Sailor and other crypto figures, which is wild. This AI stuff is pretty crazy. Like, I think a lot of that is going to keep coming, and got to be even more vigilant, really, to be able to counter that type of stuff. Let's get into the Web3 roundup from the snapshot. As always, it's pinned up top. And then we've got a bit of Bitcoin news for you on the ordinals side, some context provided by our resident Bitcoin expert, English, a bit of clarification on the CATS news, to be honest. So we'll get to that in just a second. Let's do the Web3 roundup first. So number one, we have BlackRock and ARK slashing the Bitcoin ETF fees. We kind of started reporting on this yesterday. The fees seem to be just going lower as they try to compete against themselves. ARK was down from 0.8% to 0.25%. BlackRock had said 0.2% for the first 12 months. So very, very low, I guess, predicting good inflows. Let's see how that plays out. Number two, Solana Mobile announces exciting times ahead, teasing future airdrops. One of those is Samo Coin, which is announced to airdrop to Solana Mobile holders. I need to get my Solana phone working. It's not transacting properly. Got these airdrops that I can't claim. This is killing me now that I've actually decided to open it. And also, Chimpers announces partnership with GameStarter to push Web3 gaming. That's very cool from the Chimpers team. And a couple of other pieces of news, a bit more on the creator side. The Zai Games airdrop goes live today. That's one of the biggest kind of gaming universes on Arbitrum. And the Apple Vision Pro is available in the US from February the 2nd. Wanted to put that in there from a creator perspective, seeing whether we're going to end up playing around with that, put that on your radar. But that's it from that. Legendary, shall we get into the Puppets news?
Let's do it. Do you want to set it up?
Yeah, okay. I'll set it up. I think, the main point I wanted to share about the Puppets, the Bitcoin Puppets, is that they did a lot of volume. They did a lot of volume in the last 24 hours. Let me just double check the number. The amount of volume was, here we go. They did $1.9 million volume in the past 24 hours. They surged to a 0.029 Bitcoin floor. That's $0.2 million more of volume than Node Monkeys, which has obviously become the go-to collection on Bitcoin as things stand. So yeah, it looks like this is the thing that people are going crazy for at the moment, Legendary. What do you think? What do you think about the Bitcoin Puppets?
I need to find more time to invest into and educate myself about the current state of the ordinal system. I feel like it was easier when I got in last year because there wasn't a lot of happening essentially. But now I feel like it's impossible to catch up, and I feel like seeing that kind of volume on ordinals is super impressive. There's something, I think you said it in one of the last shows, right? If you see a 10x for a BTC priced collection for ordinals, it somehow feels more substantial something moves from 0.025 to a quarter of a BTC than a similar 10x in Sol or in ETH priced NFTs. For some reason, it feels, I mean, completely arbitrary feeling, but for some reason, it feels a bit different.
Well, yeah, I mean, I saw someone talk about it in the easiest way to think about it is like the unit bias is crazy. And by that, we mean like 0.01 Bitcoin is just like loads of money. And like 0.02 or like, so so 0.1 of Bitcoin now is approaching $5,000, right?
Yeah, and that is still, I mean, we are like, I'm very, very happy with pricing stuff in ETH. Like when I calculate, my flights or my hotel, I do price natively in ETH in my head already, because most of the time I'm exposed to calculating in ETH, and that works. But then I told you I shifted some of my portfolio over the weekend, or like bits of it from the liquid available stuff into BTC, and then I did a couple small transactions where like, oh, those two transactions are like just 0.1 BTC. That wasn't like a lot of money that moved. And then you're like thinking, actually, you did swap 2 ETH into 0.1 BTC. And then you realize, oh, that's more money than I thought, because, I did a couple transactions like, oh, that's not even 1 Bitcoin that I just swapped around.
That's a terrible trade, man. That's a terrible trade. That sounds like a terrible trade. You swapped 2.1 BTC. That's terrible.
Yeah, we had the lowest ratio for God knows how long between BTC and ETH. Sam had a beautiful chart on that, I think a week ago or something. But yeah, it doesn't sound like a good trade if you put it like that. Definitely unit bias there.
Damn, I don't know if I could hit the button on that trade, even if I thought Bitcoin was going to go more, just to get 0.1. Oh my God, that's a tough one. Jack, your hand is raised. I know you do a bunch of stuff on Bitcoin. You're obviously a BTC DGOD holder as well. What's your thought on either Bitcoin puppets or this unit bias that we've been talking about?
Yeah, it's exactly that. It's so fucking dangerous thinking in terms of the value of the actual cryptocurrency and just completely ignoring the actual USD value, because we're all decentralization maxis here. So 1 BTC is 1 BTC. But yeah, it does absolutely wreck you if you get that trade wrong and you realize that you've just lost like $10,000 on a 0.2 BTC trade that went in the wrong direction. I think it just proves two things. I think I've spoken about this before, but there's two sort of mentalities with this. It's when people have invested in Bitcoin, I won't even say early, I will just say ever, they very quickly lose the train of thought of what they put in to receive that Bitcoin, and they start very quickly just saying, I own this amount of Bitcoin. And that is super, super dangerous, because immediately you start seeing these NFTs crop up. You already do the math because you've been in ETH forever and Sol, and you just lose the concept of how much funds you're throwing around here, which is very, very attractive for the NFT side. But then you have the other option, which is when you didn't get into Bitcoin early, you see Node Monks and you see what they did. Like, you see the opportunity to just double or triple the amount of Bitcoin you hold by getting into the right NFT project at the right time, or the ordinals project, I should say, as some Bitcoin people are just shaking their heads at me right now. But you immediately again start doing that math of saying, right, I didn't do what I should have done this whole time, which is get into Bitcoin early, invest a ton of money in Bitcoin. So what I'm going to do now is I'm still not going to invest anything into actual Bitcoin. I am just going to buy the NFTs and hope they run up, and probably end with zero actual asset in terms of Bitcoin, but hold a bunch of ordinals that have all gone to zero.
Well, that would be a non-ideal scenario. You must have said something that triggered the Bitcoin Maxes after saying that he wouldn't be able to join us. Our resident Bitcoin expert, English, has rushed to the stage to correct our wrongs. English, welcome, my friend. What's your thoughts?
No corrections, my friends. Yeah, no, it's just a little bit later in the morning, so I can chime in, and plus
Amazing.
It's one of my favorite topics. Just quickly, I think that's a pretty good point. I would just say Node Monkeys has a very different value proposition than, let's say, like the puppets, which are doing phenomenal right now. One, you're betting on virality and that sustainability, which I think it's been proven that that's pretty hard to sustain. Not that they won't do well over time. That might happen. Betting on Node Monkeys is basically a bet on ordinals. As ordinals do well and low inscriptions and stuff like that, it will continue to do well. And it has galvanized a pretty strong community. So not to say that it can't tank, anything can tank, but the team did everything wrong in terms of like comms, a hacked Discord, all this other stuff, and nobody cared. It's 100% about the art and provenance. So if ordinals tanks, yes, it will tank. But if ordinals doesn't tank, Node Monkeys has a very low chance of tanking. Let's put it that way. So two very different projects.
How do you think about that, English? How do you think about that? Like these are like the inscription numbers are still like in the high tens of thousands. Yeah, Bitcoin punks are lower, other projects are lower. You know, ordinal punks were celebrated because they were extremely low, and they've been basically down only since they were hyped. So, like clearly, there's more to something than an inscription number. And how do you kind of think about the broader package?
Oh, where's he gone? Oh, he's coming back. Legendary, can you get him back up?
Yep. Should be back with us in a couple seconds.
Did you hear the question, English?
No, I didn't. I couldn't hear anybody, so I dropped down. I heard the tail end of it. It's just inscription numbers. I don't think that's the value proposition, if that's the question.
Go on, Sam.
Yeah, no. The question was just like, yeah, you mentioned this is a bet on ordinals because of the low inscription numbers, but it feels like, you know, that was the case for ordinal punks, and then ordinal punks basically have gone from 4 Bitcoin to 1 Bitcoin or lower.
Oh, okay. So yeah, so it's just one component. There's no other collection that has this. I mean, the Badgers, minted towards the end. It's just to be able to do the majority of the collection 10K. It's not 100% sound thesis. I would agree with that. And Ordinal Punks doesn't have the community that's kind of galvanized by this. There's always tangents there, but at this point, there's no other collection that can say, hey, we came up with the original art that was very distinctive at this low number. It's just a scarcity thing. If you're like a Bitcoiner and believe in hard assets and limited things, you just can't roll back the time there. Yeah, I would say that Ordinal Punks came out and there just wasn't much in the market to kind of, vampire any liquidity from there. And so I would say that Ordinal Punks will still retain value and there'll still be hype cycles. I mean, we just saw Node Monkeys lose a third of its value from 0.3 to 0.2. And I think that'll keep going. My point was more about the puppets, which is just a very different type of project. If nobody remembers it in 6 months, nobody will remember it. I don't think that that's really possible with Node Monkeys at this point.
Interesting stuff, man. Thanks so much for that. One final one for you, English, because you're here. And we'll close the show just after this one. We kind of perhaps incorrectly reported that Taproot Wizards' a second collection would be Taproot Cats. You wanted to provide some clarification there. What's exactly going on? I mean, I can see a tweet from Taproot Wizards' account saying, "Make Bitcoin meow again."
Yeah, I think there's speculation that because there's some technology that Taproot Wizards used, and it's not the first time it was used. I guess there was a little bit of a race where you use NSAT points to make an unrevealed collection. So all credit to the Femojis that were actually able to come to market with it first. So with that, there's JSON, information that says Cat 1, Cat 2, Cat 3.
Okay.
Udi has been talking about, Luke Jr. eating cats. So I think the natural conclusion is to say it's going to be a cat collection, but nothing official has been announced.
Okay, well, either way, that is top quality level analysis of how to determine value and what's coming up in an NFT project. So I appreciate you, English. Thanks so much. I know it's early for you over there, but really, really grateful to have that insight onto the Ordinals ecosystem. But guys, we've already run over time. Happy to do so on an occasion like today, though. We hope that has been a good show. We hope you had a good time. Thank you, Legendary, for co-hosting as always. Thank you to our speakers, Sam, Jack, English, Funky, Kusho, and thank you to everyone else in the audience. Grateful to have you with us. Have a wonderful day, and we'll see you back here tomorrow. Bye-bye.